Gold has gone hyperbolic over the past few weeks. Evidently, somebody has been buying a lot of it, and the question is, why? Gold is not only a hedge against geopolitical risk, but it is without question the best hedge. What does the gold rally since late February say about perceived geopolitical risk right now? Is it possible that one day we might look back at the gold rally of the past 3 weeks as marking the end of the stalemate in the Russia-Ukraine war? How likely will we see NATO troops in Ukraine? Should you be buying or selling gold right now? Gold was down in 2021, flat in 2022, and spent much of 2023 inside the 10% range. But over the past 3 weeks, gold went hyperbolic, rising by nearly 10% in the space of just 2 weeks and hitting an all-time high. Gold's recent move caught many investors, including myself, by surprise. And this is why. Gold is highly correlated with yields on U.S. Treasury inflation-protected securities, known as real yields. U.S. real yields dipped a little over the past few weeks, but the magnitude was too small to be able to account for the size of the gold rally. Everyone knows that gold is the anti-dollar. Since late February, the dollar has weakened a little, in line with the decline in U.S. real yields. But once again, the magnitude of the dollar move cannot remotely explain the size of the gold rally. Gold is considered an inflation hedge. This is why it has generally a positive correlation with oil price. With the volatility of oil price having collapsed recently, oil is clearly not the reason why gold went overdrive. What about Chinese buying? An acceleration in the pace of accumulation of gold by the Chinese central bank in the second and third quarter of last year played a major part behind the 13% gains in gold price in 2023. However, Chinese buying has slowed ever since gold went above $2,000 an ounce. Chinese buying picked up in February, but not enough to have caused the dramatic rise in gold price. What about Bitcoin? Both gold and Bitcoin are viewed as safe havens of sort. This is why they're positively correlated. It just so happens that the recent gold rally coincided with a rally in Bitcoin that also hit a record high. Is it possible that the Bitcoin rally that started last October is finally spilling into gold? If you ask me, it's possible, but it's not likely. Or rather, evidence for it is weak at best. The Bitcoin rally has to do with the launching of Bitcoin ETFs that have, rightly or wrongly, made it much easier for general public to invest in cryptocurrencies. The recent rise in Bitcoin price is the result of big and growing inflows into Bitcoin ETFs. Last week alone, $1 billion poured into Bitcoin ETFs. In contrast, retail interest in gold ETFs has been declining. Indeed, the outstanding number of shares of GLD, the largest gold ETFs, is falling despite the rally in gold. This is what we can say for sure. Whatever is driving the gold rally, it has little to do with real yields, the dollar, oil price, or Bitcoin. So what's going on? Who's been buying gold and why? A unique attribute of gold is its stable correlation with geopolitical risks. Unique because stocks and bonds are negatively correlated with geopolitical risk, as a recent Journal of Banking and Finance paper and others have discovered. In other words, gold is in a class by itself as a hedge against geopolitical risks, especially geopolitical threats. Is it possible that the recent spike in gold is the result of increased geopolitical threats? For whatever it's worth, the recent spike in gold is similar in magnitude to the spike following the Russian invasion of Ukraine in 2022. Has there been a similar increase in geopolitical risk in recent weeks that could explain the rally in gold? I will let you be your own judge. On February 27, Emmanuel Macron, raised the prospect of deeper NATO involvement in the Ukraine war when he suggested in a speech that NATO should not rule out deploying troops in Ukraine. In response, on February 29th, Vladimir Putin said that NATO troops in Ukraine could trigger use of nuclear weapons by Russia. A day later, Moscow leaked an audio recording of a meeting of senior German officers discussing possible Taurus missiles delivery to Ukraine and confirming that British troops were already in Ukraine to help with the use of the Storm Shadow missiles. A week later, the Polish foreign minister said that the presence of NATO soldiers in Ukraine is not unthinkable. While all this was going on, NATO was and still conducting its biggest military exercise since the end of the Cold War. Indeed, some 90,000 troops from 32 countries with 1,000 armored vehicles, including more than 100 tanks, have been holding exercises in Poland and Norway. These exercises will continue until the end of May. It is impossible to prove definitively that these events were behind the Go Rally. But can it be just a coincidence that the bulk of the Go Rally happened while these events were unfolding? This is what my gut tells me. The latest war of words between NATO and Russia made some investors very nervous. As a result, they bought a big chunk of gold as a portfolio hedge. But are their fears justified? More specifically, how likely will we see a direct confrontation between NATO and Russia? It's been 2 years since the start of the Russia-Ukraine war. The war may be the biggest story in the world, and for a while, the biggest story on Wall Street. However, ever since the war went into a stalemate, financial markets completely lost interest. And the reason is very simple. A stalemate helped contain any spillover of the war to the rest of the world. A year ago, I predicted that markets will wake up to the war only when one side got the better of the other side in the battlefield and broke the equilibrium. And this seems to be what happened over the past month. The Russian takeover of Avdiivka last month wasn't like earlier grinding Russian victories in Mariupol, Severodonetsk, even in Bakhmut. The relative ease with which Russian forces overcame the Ukrainian defenders in Avdiivka was the result of the mass production and deployment of a new weapon, the Fab 1500, a powerful glide bomb that can be fired 40 to 70 kilometers from the target. Russia's ability to adapt and innovate is shifting the balance in the war. This comes on top of the fact that Ukraine is also running out of money and men. The last 2 years have taught me to be cautious about making any prediction about this war. Nevertheless, I suspect we might look back one day at the Go Rally over the past 3 weeks as marking the end of the stalemate in this consequential war. This is the million-dollar question right now. Will the end of the stalemate in the Ukraine war lead to a direct confrontation between NATO and Russia? To answer this question, let's look at the incentives and reaction functions of the two sides. Let's start with the NATO side. I think it is pretty safe to assume that deeper NATO involvement in Ukraine requires both Germany and the US being parties to it. A recent poll shows that 56% of Germans are opposed to sending the Taurus missiles to Ukraine. This explains why Olaf Scholz, credit to him, seems strongly opposed to sending the long-range missiles to Ukraine. I would not be surprised if Macron's reckless talk about sending NATO troops into Ukraine have had the effect of making the usually cautious Scholz even more cautious about risking a serious escalation with Russia. In case you're wondering, I haven't forgotten that back in 2022, Scholz was opposed to sending the Leopard tanks to Ukraine and then changed his mind later. However, back then, the US was pouring a lot of resources into Ukraine, and Washington could lean on Berlin to do its fair share. The situation is very different today. Whereas the European Union reached agreement last month on 50 billion euros worth of aid to Ukraine, Biden's $60 billion Ukraine package remains stuck in Congress. Meanwhile, Donald Trump, who remains opposed to sending more money to Ukraine, is comfortably ahead of Biden in the polls. This makes it even less likely that Mike Johnson, the Speaker of the House, will allow the Ukraine aid bill to come up for a vote on the floor. As for Biden, the fact that the Ukraine war is not going well may be a good reason for him to want to put some distance between himself and the war. This is my interpretation of the resignation this month of Victoria Nuland, the Undersecretary of State, the biggest supporter of Ukraine inside the Biden administration. My guess is that Nuland, a neocon and a super hawk on Russia, was struggling to get the president's ear. I think Biden has decided that if Russia were to win the war, he can always blame it on the Republicans for depriving Ukraine of money and weapons. What about Putin's reaction function? Putin has repeatedly said that Russia does not want an escalation with NATO. There is no reason not to take him at his face value. An escalation could well lead to World War III, in which everyone is a loser. This is why NATO troops in Ukraine is probably his real red line. It is interesting that while Moscow is talking tough in response to the NATO troop deployment debate in Europe, Russian offensive along the contact line in eastern Ukraine has slowed. It is hard to know if this is due to strengthened Ukrainian defense or a deliberate decision in Moscow to slow walk the war for a while. I'm leaning towards the latter reading, as Moscow does not want to pour fat over fire and galvanize NATO unnecessarily. The IMF estimates that Ukraine has a funding gap of $40 billion this year alone. With oil price in the mid-80s, time is on Russia's side right now. My guess is that the Russian offensive will remain steady and gradual in the foreseeable future. With Putin expected to win big in the Russian election, he has enough political capital to not have to take any unnecessary risk. The stalemate of the Ukraine war has come to an end. This means uncertainty about the war has gone up, especially with respect to potential deeper involvement of NATO. This is why gold has rallied. But I think the US election will keep the war of words between NATO and Ukraine from boiling over. The fact that Russia knows when to slow walk the war while exploiting disagreements within NATO is another reason why I'm not too concerned about the geopolitical risks associated with the Ukraine war right now. Indeed, at least for now, the high geopolitical risk premium in gold is hard to justify. Thank you for listening. If you got something out of this program, please hit like and subscribe to my free YouTube channel. Let me know what you think by posting your comments on the video. If you want to learn more about my investment strategy, come visit us at davidwuunbound.com.